webinar. We sent you information, so at least you have a idea on where we are. Could we just kickstart? Nigel, nice to see you. Right. So we can see you now, Leonard.
Yeah.
Welcome to this webinar series. As you know, the headline says it all. You're talking about beyond remittances. And the webinar series is designed to think outside the box in terms of issues that we are facing in the Caribbean, particularly beyond remittance. You are an international banker. My name, you know, Nigel is on the other line. And basically, by way of introduction, it's important just to get a background about you and what you have done. The last webinar, we did a sort of introduction that people were expecting to have you on board, and you're a person who have been in international banking for a number of years and what you have done. So if you give us a quick overview of your background to kickstart this series.
Well, let me tell you that I've, in addition to being the point person for National Commercial Bank in UK for the last 10 years, before that I worked in Jamaica, Egypt, Oman, Dubai, and Sri Lanka, so in international banks. So briefly, that's my profile.
Yeah. So it's good. It's easy to say that you have a good experience and expertise in the whole idea of banking in various areas, from first world to emerging markets.
Yeah. Yes.
And the issue at hand now is that, as you know, in the Caribbean, you've been here long enough to be identified as a Caribbean man, I would think, of international experience. And you would have seen a number of issues that we have faced in the whole banking challenges that we face in the Caribbean. One particular area that we are focusing on is the whole idea of what's happening now with regards to banking regulations and third-party banks. And can you give us a sort of background of this and your views on some of the options that could be exercised as we face this dilemma?
Well, I don't think there are any major changes that took place recently, except for the fact that most of the banks are kind of correspondence banks, especially, strictly adhering to. But as a result, I see there are certain banks which are looking at their correspondent banking relationships thoroughly. So as a result, some of the relationships looks like are coming under review. I am not privy to some of the relationship reviews which has taken place, but I understand that there are certain institutions which are finding it difficult to maintain correspondent banking relationships. Being a bank ourselves, I know the tremendous pressure that correspondence banks, especially international banks out of UK and US, are exerting on Caribbean, Asian banks. So this has come as a surprise to some institutions, but I must tell you, NCB has not been affected, and we have a very strong relationship with our correspondence banks, both in US and UK, and our relationships with these banks have been excellent and will be so.
Just tell me, Leonard, on that score, do you have contractual arrangements that would support the fact can give you confidence that you would not be affected in any way?
Well, a banker-customer relationship has its own contractual obligations on both parties. There are certain, as with any contract, there are certain notice period which either party has to give to terminate the contract. So nothing is to say that that you cannot close an account, or either party can give notice and close an account. So there is nothing to say that either the bank or the customer cannot close the account.
It is said that this is obviously the whole issue has come about because of concerns with regards to money laundering. And the other concern was raised because of the cost of maintaining these relationships. There were a number of ideas given why this has now become an issue. Could you identify or outline to us what are some of the real issues behind this?
Well, I really don't know how each bank looks at their relationships and their cost structure. But I can tell you from what I gather from my colleagues who are working in the banking sector here in UK, that some of the business models of these remittance companies and different jurisdictions does not fit into their overall business model. Secondly, remittances in a traditional form has been cash based. So most of this cash is collected by some of these commercial banks, and as a result, I can understand their cost per transaction is very high on these transactions. Simultaneously, if they look at the risk profile of these transactions and the customers, they perceive them to be high risk transactions and customers. So it's a perception, and they must be having their own reasons to do that.
From what you have known, has there been any recent cases of banks being penalized or being withdrawn because of these sorts of awkward transactions or these sort of relationships?
No, I have no idea.
Right, Dennis, let me just stop in for a second. Thanks again. They might not quite know me, but I've worked with Dennis and Seth for a while now. My questions are more about what are the implications for individuals, for businesses, and for entrepreneurs of these new regulations. Because as you rightfully said, that your bank's got the governance structures and stuff in place, so this is not going to affect you in any significant way. And you also identified clearly that the cost of serving cash remittances is getting quite high for banks. About transaction costs because it's a human that has to handle cash, and a business perspective because these transactions are going to be flagged as potential money laundering. Is that a fair summary?
Well, firstly, let me I understand what your concern is. Firstly, if you are looking at some of these jurisdictions which are being affected, are high countries which are dependent on inward remittances.
Yes.
So these countries will be concerned.
Yes.
But it's not that there is no other avenue to send money to those countries.
Good.
There are so many avenues,
right.
So many ways of customers who can send money to those countries. So to say that, well, because of this, the economy of these countries are going to go down is incorrect. Secondly, we as a bank, a national commercial bank, we have a subsidiary NCB Remittances. Our main concern is main line of business is supporting the small and medium scale enterprises coming out of Jamaica.
Yes.
We support so many customers who import stuff from Jamaica and depend on effecting payments to the suppliers.
Yes.
So that hasn't been affected.
Excellent.
So yes, there will be customers who are affected because those customers who are being transacting with these institutions where the banks may take a view or decide that it's not profitable or it's not safe, the structures are not in place. Those customers will be in the short term affected, but they have other avenues. I mean, NCB is there. There are other institutions which will continue to do business.
Great. So from an export perspective, this shouldn't affect small and medium-sized enterprises at all. They have other ways in which they can work.
Remember, we are the only commercial bank out of Jamaica who has a representative office in UK.
Okay.
So our customers have been always been with us, and I'm sure we can accommodate some of the customers who will be affected, if at all.
And one more scenario before I turn you back on to you back over to Dennis. If, for example, I was buying or trying to sell to a customer in China, let's say I'm buying something from China, and I have to go to an intermediary bank in China, would this be an issue for me as well if I were trying to import a container to Trinidad or Jamaica from China? Would that be an issue?
I don't know how these correspondence relationships are reviewed.
Right.
It is from bank to bank, institution to institution.
Okay.
So it doesn't mean that there are so many banks in Jamaica, so many institutions in Jamaica. Not all those banks have been affected. Not all those institutions have been affected. There will be where the governance structure is thorough, where they are comfortable with the business model. Correspondence banking will continue. Okay. It is the same with China. It is the same with Jamaica or Costa Rica or Sri Lanka or India. It is different institutions how the rules are being applied based on their perception about the governance and AML thoroughness of the AML procedures.
Great. Thank you. So back to you, Dennis.
Yeah, from that question, Leonard, could you talk us through some protocols and governance that a client, whether it's an SME or normal personal client, should engage with when dealing with you and correspondence banks, so as to minimize any sort of concern regarding they being, disenfranchised?
Well, I mean, it is our responsibility to make sure that the sender and the beneficiary the KYC, the know your customer aspects are fulfilled. So as long as we can show to our correspondence banking banks that we are thorough in our KYC procedures and AML procedures, that's when they are confident that they are dealing with a legitimate and a safe institution. So I don't know, there is nothing a customer has to do, but it is always the institution which has to make sure that we take the necessary precautions to identify that the transaction is a legitimate transaction, and the customer from the send side and the recipient side is our legitimate businesses or transactions that are legitimate, basically.